Yeah, hello and welcome to another update video about gold. Yeah, gold extended a little bit higher in line with our bullish projections overall. Yeah, so I think we are in a bullish market, bullish metals market, and this could still carry on for a little bit longer. We are dealing here with a situation in which the target for the white third wave was reached. So if you watched the last video, then you know that this was sort of our next target area here for the third wave. I want to share with you two potentials that I'm tracking now, and we zoom out first to explain that a little bit. So first of all, the idea is on this chart that a larger degree fourth wave bottomed in November 22, November 22. We have an ABC structure in wave 1, we have an WXY in wave 2, and now this is the third wave to the upside that's unfolding, and it's either the white count, in which we also have an ABC structure, in which the C wave should get another 4-5 pattern. This is my preferred scenario. We're going to take a look at the relevant parameters in a minute. Or, and that's the alternative, which would be more bullish, is if the entire rally up is only the A wave. Okay, so that's obviously what we don't know. So it could be that, you know, ABC in wave 3 or ABC in a larger A wave. Okay, and then we get a B and then a C. So it just means what we have here in small could actually have happened in larger, and the third is super extended. Does that make sense? I hope so. Let me know if not, but it means basically in the preferred scenario, it's a simple ABC structure. In the alternative, the ABC is just forming a larger A wave, and we get a larger B wave, which is obviously going to be deeper than this fourth wave pullback. And then we should see a C wave, and the third will only be up there. And then we get the fourth a little higher and the fifth even higher. Okay, so, but that's not preferred at this stage. I'm following primarily the white scenario, in which obviously, as I just said, we're likely dealing here with an ABC structure, and the C wave is currently stretching in 5 waves, and we have already wave 1 completed, wave 2. Based on that, we calculated the target range for the third, and we now need likely another 4-5 pattern to complete the C wave of the larger third wave. If you're wondering why we're dealing here with ABC structures, well, it's quite simple, because we're dealing with a fifth wave. The fifth wave is an ending diagonal quite clearly, because the wave 1 is an ABC and the wave 2 as well, given that this is a corrective price move to the upside. So yeah, that's sort of what I'm tracking. If we're then dealing with a 1 hour chart here, we can add these support, and it seems like the fourth wave has started to unfold, right? I think similar to silver. Let's see. I mean, in the preferred option or preferred scenario, I'm tracking now the fourth wave support between the 23.6 FIB and the 50% FIB level, and we are going to add that now to the chart. It's here. I can actually take the 20th. I think it should be here. So if this really is an impulse in that C wave to the upside, then the price should not break below 2,995. Okay, so that's sort of what I'm tracking. If we break below that, I would have to assume that this larger degree third wave already topped, but possibly then even rather the A wave. That would be, for now, I'm looking at higher. Okay, I'm looking at one more 4-5 pattern in either wave C of 3 or in wave C of the larger A wave. But if we break below that key pivot at 2,295, I have to assume that those tops are already in, one of them. And then we can maybe in the next video adjust the support region accordingly for a deeper pullback. For example, as I just said, in the yellow count, then I would have to assume that this already topped and we get a deep B wave pullback. Maybe I should already give you an alternative support area then in that case, and that would be typically between, oh, that's the alternative, but that should then really hold. I mean, and that just gives you some levels to watch. It's between the 38.2 Fibonacci retracement and the 78.6, because the B wave has quite a wide, let's say, bandwidth of where it can land. B waves can be shallow, B waves can be deep. The 78.6 Fib level would not be preferred, however, it's probably going to be then between 2,189 and $2,042 from where we can then look for higher prices. So that's the idea. Either do this, pullback, rally, or deeper pullback now and then rally. So both counts are bullish, and I don't expect the rally for gold to be over yet. So that's my update about gold. If you like the update, then please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.